Hello all. This video focuses on the schedules of cost of goods manufactured and cost of goods sold. I will first give you a quick summary of the concepts relating to the two schedules and then follow up with a problem solver. Let's get started. The cost of goods manufactured is a calculation of the production cost of the goods that were completed during an accounting period. In other words, it includes the costs of direct materials, direct labor, and manufacturing overhead that are included in the products that are moved from the manufacturing area to the finished goods inventory during the accounting period. The calculation is presented in a schedule format. The following line items are found in the cost of goods manufactured schedule. We start with the beginning raw material inventory, and then we add the cost of all raw materials purchased during the period. That gives us the total raw materials that are available for use, but we don't use all our materials. We have an ending raw material inventory. So we subtract the ending raw material inventory balance and we get the raw materials that were actually used. Now, in this section, we're concerned about getting direct materials used. In that raw materials used, we have some indirect materials that were used during the period. So we have to subtract those indirect materials out of that raw material used amount to get the direct materials used. Next, we add the direct labor cost, followed by the manufacturing overhead applied. And at that point, we have total manufacturing cost because we have direct materials, direct labor, and manufacturing overhead applied. But that's not the end here. Because to the total manufacturing cost, we will add the beginning work in process inventory to get a total, and then subtract the ending work in process inventory to finally get our cost of goods manufactured. You should note that there are basically 6 sections to the cost of goods manufactured schedule. The first section is the determination of the direct materials used, followed by direct labor. The third section is to add the manufacturing overhead applied. In the fourth section, we add the direct material, direct labor, manufacturing overhead applied to get total manufacturing costs. In the fifth section, we adjust for the change in the work in process inventory. And then finally, the sixth part is the calculation of the cost of goods manufactured total. Once the cost of goods manufactured is determined, this information is then used to derive the cost of goods sold, which will then allow us to complete the income statement. The cost of goods sold is the cost of the products that a retailer, distributor, or manufacturer has sold. For a manufacturing company, it includes the direct materials, direct labor, and manufacturing overhead needed to produce the goods that are going to be sold. Cost of goods sold is an expense account because it is considered the cost of doing business. Cost of goods sold is subtracted from sales revenue to determine gross margin, or some call it gross profit. For a manufacturing firm, the cost of goods sold is derived as follows. We take the beginning finished goods inventory and we add the cost of goods manufactured to it. The cost of goods manufactured is coming from the cost of goods manufactured schedule. At this point, we have the cost of all goods that are available for sale. But we don't sell everything. We have an ending balance in our finished goods inventory in most cases. So we subtract the ending finished goods inventory to get what's called an unadjusted cost of goods sold. At that point, we adjust the cost of goods sold by either adding the underapplied manufacturing overhead or subtracting the overapplied manufacturing overhead. The result is an adjusted cost of goods sold balance. The cost of goods sold then appears on the income statement where it is subtracted from sales to determine the gross margin or gross profit. Okay, let's look at a drill. This drill asks us to prepare a schedule of cost of goods manufactured and a schedule of cost of goods sold. These types of problems always are going to provide you information on inventories. So you see, you have the raw materials, work in process, and finished goods inventory. You have beginning balances and ending balances. You'll always need this information to prepare a cost of goods manufactured as well as the cost of goods sold. In addition, you'll always get information related to the purchase of raw materials, whether any indirect materials are included in the manufacturing overhead, the amount of direct labor costs, and then you'll get information on how much manufacturing overhead was applied, in this case 78,000, and how much manufacturing overhead actually took place, 83,000. So you see right away that we are underapplied in this problem because the actual overhead was 83, the applied 78. We didn't have enough overhead this period. Now let's look at the preparation of a schedule of cost goods manufactured. On my spreadsheet, I have all the line items here for you to see. On a test, you'd be expected to know what these line items are and be able to prepare this whole statement without a template. In multiple choice type questions, you're just going to get asked for pieces of information. So let's look at this. First of all, you want to recognize the fact that there's really 6 parts to this statement. First part deals with direct materials. Second part deals with direct labor. Third part deals with manufacturing overhead applied. So those are your production costs. You add the 3 together and you get the fourth part. The fourth part deals with your total manufacturing costs. Then there's a work in process section where you're going to determine the change in work in process. Then finally, you'll get the cost of goods manufactured. Let's work on direct materials first. With direct materials, you see, we start with the beginning balance in raw materials inventory, $10,000. There it is here. We add the purchases of raw materials during the period of 33,000. This is given here. Add the 2 together. So we start with 10, we buy 33. Now we have 43 in raw materials that are available to produce stuff. We subtract our ending balance in raw materials inventory from the 43. You subtract 15, and we get 28,000 in raw materials used during production. Now this is raw materials, so remember raw materials includes both direct and indirect costs. So to the extent that indirect materials are included in this 28,000, and they are 4,000, we have to subtract the 4,000 from the 28 and we get direct materials used of 24,000. There you have it. We've got the direct materials. Recall from class that we talked about BASE, B-A-S-E, and we said that BASE was a good acronym to use to help solve problems relating to inventory. Anytime you're dealing with inventory issues, you take the beginning balance of the materials inventory, you add any purchases, you subtract the ending balance in the inventory account, and you'll get your equals to whatever you're looking for. So keep this in mind when you're dealing with inventories and you're dealing with problems that are asking you to find one of the components of inventory. You'll see later on in the lecture, we'll talk about how we could apply base as well to cost of goods sold. It's just a nice tool to make things easy. Okay, let's move on to direct labor. Direct labor is always going to be given to you. In this case, it's 58,000. We just bring the direct labor cost down. Manufacturing overhead applied, given to you, 78,000. We're bringing the 78,000 down. At this point, we're ready to calculate total manufacturing costs. Total manufacturing costs are the total of direct materials, direct labor, manufacturing overhead applied, 160,000. That was the cost of manufacturing during the period. Now, the next step is to move to the work in process category. Note how we add beginning work in process to the 160. We take 160, add 56 to it, and we say, okay, now we're at 216,000. But we didn't complete all those goods because we have an ending work in process inventory of 72,000. So we subtract the 72 from the 216 and we say, okay, what we actually manufactured in turn on a cost basis is 144,000. Now look what we're doing here. And to the right, I say that the work in process change in this problem was 16,000. In other words, our beginning work in process was 56, our ending work in process 72. So we went from a beginning balance of 56 to 72. We increased our work in process by 16,000. Because we increased our work in process by 16, when we got this total manufacturing cost of 160, we had to subtract the 16 from it to get the goods manufactured of 144,000. Why? Because even though even our manufacturing cost was 160, not everything was completed during the period because our work in process inventory actually increased. So understanding that you go from 160 to 144 based on the change in work in process is key here. Now let's take a look at preparing the schedule of cost of goods sold. To prepare the schedule of cost of goods sold, we need the beginning finished goods inventory, the cost of goods manufactured. We add those two together and we get the cost of goods available for sale. Subtracting the ending finished good inventory gives us our cost of goods sold. In this case, we're calling it an unadjusted cost of goods sold because it doesn't include the underapplied or overapplied manufacturing overhead amount yet. Once we include that amount, we're going to get a cost of goods sold. And that's the cost of goods sold that'll find its way to the income statement. All right, let's go through these numbers real quick. We say we have a beginning finished goods inventory of 41,000. That was given in our information right from the start. Cost of goods manufactured, 144,000. That number comes from our schedule of cost of goods manufactured. We add those two together and we get our cost of goods available for sale, 185,000. We don't sell everything though. We have an ending finished goods inventory. The ending finished goods inventory is 49,000. 49,000. We subtract the ending inventory from the goods available for sale of 185,000, and that's our cost of goods sold, 136,000. But note, we don't call that cost of goods sold in this problem. We call it unadjusted cost of goods sold because it doesn't include the under or over applied manufacturing overhead, which is 5,000. How do we determine the 5,000? In the problem information, it says manufacturing overhead actual cost incurred 83,000. Manufacturing overhead applied 78,000. The difference between the actual and applied is 5,000. Because the actual amount is greater than what we applied, we don't have enough costs in our problem. So we say we're underapplied. You're underapplied anytime the actual is greater than the applied. Underapplied means we have to add more cost. So we take that 5,000, add it to the 136, and get our cost of goods sold of 141,000. Now that we're done figuring out cost of goods sold, it'll find its way onto the income statement, be subtracted from sales revenue to get our gross margin. Again, it's important that you see that base helps us solve this problem. B stands for the beginning finished goods inventory. A, we add cost of goods manufactured. S, we subtract our ending goods inventory. And that will equal our cost of goods sold, which is unadjusted at this point. Eventually, we'll adjust it and get the final number for our cost of goods sold. But the point is the concept of base can help you when you're solving problems. Now that we have completed the problem, pause the video and review this slide one more time. Everything should make sense to you at this point. If not, note those areas that need clarification and look back at the video, your notes, or the book for help. Thanks for watching the video. Good luck.